Good morning, everybody, and happy Friday. Happy Thursday. I'm already thinking about Friday, but it's not. It's obviously Thursday. We'll get started here in just a moment. I'll be right. I'll be ready to go. Hopefully, you guys can hear me okay. All right. Perfect. All right. Good morning, everybody. Again, happy Thursday. It's the 20th of March today. I was looking at the calendar before. We just have a little bit more than a week left to go. In the month of March, which is just I don't even know what happened to the month of March. It just flew by. Um, However, there's a couple of important sort of inflection points here. I think we need to watch very closely. So I'm going to take my notepad here this morning and go through a couple of things. If you're here for the first time, my name is Serge Berger from thestudytrader.com. This is our Set the Market morning call. We're going to spend the next 10 to 15 minutes going through some of the most important things on our notepad as it relates to the markets. What are we going to look at specifically? We'll look at the S&P 500. I do think there's a rally potential here. A lot of things are lifting here in terms of obstacles for a potential near-term bounce. We will look at that. Then we'll look at JP Morgan, and we'll look at the energy moves, and we'll quickly touch back on NVIDIA. If you are an Inner Circle slash Market Rover member, there's a couple of new stocks we added to the active watch list this morning, so go check that out inside of the Market Rover a little bit later on. I'll be adding those here shortly. Actually, make a note. Okay, good. All right, so first of all, let's just understand a couple of things. First of all, tomorrow we have options expiration for the month of March, the monthly ones. And so there's a lot of weird options games that are being played, so you have to just kind of be aware of that. And it is likely that we're going to start to see a more directional move in either direction after that. Already yesterday, after the Fed, a lot of hedges came off, and we talked about that over the past few days. We said that is going to happen going into yesterday. That doesn't mean the market has to rally. It just means that the path of least resistance from a flows perspective opens up to the upside a bit better, meaning there's less downside pressure. And once we get past tomorrow's options expiration, that will probably further lift, and we'll see if we can get a rally. How much of a rally? Let's take a look at it here through the lens of a couple of charts. First of all, keep in mind short-term, our TST trender, a momentum indicator, and I hope you're using it because it's an unbelievable tool. We do still have bearish momentum, whether it's the S&P 500, the NASDAQ 100, which is what we're looking at here on the daily chart. This is a daily chart. Each one of these bars is one time frame, so as one day. So, for example, yesterday, this was yesterday's move. In the very, very even more near term, before we get bullish momentum, if we do need to clear on the NASDAQ 100 the cues about 485 on a daily closing basis. 485 on the SPY, just for reference purposes there, we have to clear probably 570 on a daily closing basis would be my guess. That's been where we found resistance yesterday intraday, on Monday, intraday. So those are some levels that I'm watching pretty closely. If and when we're able to get above that, that would be great. Anything between now and then is basically just trading. So to give you a bit of an idea, this morning in the buzz and banter, I I offered a couple of trades, and specifically what I mentioned in real time is that we got oversold in the on the futures, and so what? In fact, where did I put it? I put it in here. I showed the oversold chart in the Nasdaq 100 futures, I believe it was, and then of course we did end up bouncing. I ended up having a breakfast meeting, and but that's just very, very near term. That's intraday stuff, right? That's based on our vertical X Pro indicator. Nice trades, whatever, made $1,000 or something quickly on some futures, and a very clear sell signal that happened earlier. So if you're not using the trender yet, and the vertical X Pro, I just would highly encourage you to get a hold of those. Just make sure you reach out to our team, and then also make sure you join us inside the Trade Ops chat room. We have a special session today at 11 o'clock Eastern, 8 o'clock Pacific AM to go over all that a bit more. So make sure you join us there. I don't have the link here right now, but I'll try to find it here over the next few minutes. Although I'm not quite sure I can find it. I'll find it. So that's that. Now, the other thing I want to quickly go through is levels in terms of where could we bounce. Well, if we look at the S&P 500, what you'll find is that we have, again, this level here where we got very oversold in many things, and I'll talk about seasonality here as well, which actually I think could play a role. But I wouldn't be surprised if we do rally here, if we're an oversold bounce. If we get to, as far as S&P levels go, maybe we go to 5,900-ish, just kind of back into sort of the initial breakdowns. It's possible. That would make the entire bounce level, the bounce then about, 6-7%, and from here another 5 or something percent. So I think that's a possibility. But I think what's even more important than that is to be open-minded. This is the year of the trader. That's why we've made such a big deal about this. So if you can't be open-minded as to directionality, and you're still just hoping for your NVIDIA stock to skyhook to fresh all-time highs, which it hasn't seen, by the way, for a long time now, so that story's getting a bit stale, I think you need to be open-minded. Now, I will say that I'm actually, for the first time in many months, more interested in Max 7 stocks again from a trading perspective. I still don't think they're going to make fresh all-time highs anytime soon, and I think they can turn to value stocks as opposed to growth stocks at some point. But again, they're not going to be the leadership anymore that's going to bring the S&P to rally, 20% a year. I think that those days are over. And if you're banking your retirement on that, then please wake up and smell the bacon, because that's a serious risk to your financial future if you keep thinking that way. So what about seasonality? As you guys know, seasonality is a bull market phenomena. But it serves its purposes in sort of micro seasonality terms as well. So here is the chart of seasonality that I would like to share with you. And I think what stands out here is for the S&P 500 seasonality is that here in the month of March, basically about right now, is when we typically have the potential for a pretty good rally. That could set off something that lasts into May, right? I don't know. I actually think April is going to give us more problems because we have earnings season coming. And I think a lot of people are going to have a come to Jesus moment in April. So I wouldn't bet too much on it because, again, I think the raging bull market's over. So seasonality only works a quarter as good as it usually does. Nevertheless, I don't want to dismiss the seasonality, which also coupled with hedges coming off after yesterday's Fed meeting, tomorrow's options expiration, then coming into next week. So there's a lot of stuff here that, to me, raises the odds of an oversold rally. And I stress oversold rally because I don't think this is going to bring us back to all-time highs anytime soon. And again, if you're banking your retirement on 15% S&P 500 returns, please wake up and then realize that is most likely over. So I think there's a potential here for that to happen. And indeed, just getting to a couple of individual stocks, there is actually precedent, we're seeing the potential for that and being displayed in other stocks too. Like you look at JP Morgan, we talked about this stock earlier this week, and I believe even last week, as it started coming into some pretty critical support, 200-day moving average, it's oversold. We've got, we can draw some simple lines here and see their support. So I actually think this is a pretty logical level for the stock to bounce. It's already bounced, by the way. So I know some people already took that trade. So it already rallied as much as 8% on an intraday basis. So it's been a good move. I wouldn't be surprised if it has a bit further to go. So we're seeing some pretty big stocks at pretty key levels that where they could bounce. So that's something that I'm watching very closely. Actually, quite frankly, same thing with something like Tesla. Now, I want to see Tesla clear probably 250 before attempting something here. But again, and these are just trades, right? I'm absolutely not buying the stock from an investment perspective yet. Maybe at some point. Again, I'm certainly not there now, but maybe that'll become something interesting once again at some point. We'll have to see. I think it depends on what Elon Musk does in terms of focusing back on his companies. NVIDIA too, again, just as a reminder for everyone that is unwilling to look at facts, but NVIDIA is back to where it was in May of last year, right? So this is where it was last May. This is where the stock is right now. I wouldn't be surprised if we see an oversold bounce, but I think NVIDIA is probably going to be the one stock where a lot of institutional investors are looking to further reduce their positions, not because it's a bad company, but because they're so overly allocated to that. Now there's other things to allocate to, right, around the globe. And so I wouldn't be surprised if we continue to have a choppy trading range in NVIDIA. We've already had that, right? It's nothing new. So anyone that tells you NVIDIA is going to go back, is going to, go back into the soaring skies, you may remind them that it hasn't done nothing since last May. Again, being objective and open-minded here is really, really, really important. So, but I think it's a choppy range until proven otherwise. Until a lot of people that are high on hopium. There's a lot of. I saw someone in a chat room the other day talking about them buying a 3 times levered NVIDIA ETF on a little bounce, and then it bounced like 1% or something like that, and they were pounding their chest. Until that kind of behavior stops, and those people basically lose a lot of their money. I don't think the stock can really clear higher in a meaningful way, because all that's going to happen when people do that is larger institutional investors are going to sell into that to bring their portfolios back in balance. And I think that's something that people don't want to hear. A lot of technologists I talk to have been telling me since last May that the stock's going to go to $1 bazillion. Again, it's done nothing since then, and it's not because it's a bad company or that they have bad products. Obviously, it's awesome. But everyone's in the stock, right? And so the marginal buyer is simply not present now. It may come back. In fact, I would argue it will come back, but I don't know when that is, right? And the question is, does one want to sustain a 40% drop in a stock like that if one really is banking on the stock going up every quarter, which is what most people are banking on when they look at a stock like that? So I'd be a bit careful there. I finally found the link, by the way. I'm going to quickly drop this into the chat box here. So this is the link for today's session at 11 o'clock Eastern, 8 o'clock Pacific. And this link here is going to allow you to join us in a session today where I'm going to walk you guys through how the trades we do inside of our trade rooms. It's an app we use. It's called Slack. You can put it on your phone. And we basically make people in real-time alert with trades and ideas that we do. So if you're consider yourself a self-directed trader or investor, it's imperative to have information like that. So I'll show you guys a little bit how that works today at 11 o'clock Eastern, 8 o'clock Pacific. And the link for that is in the chat box. Also, it is Ticker Thursday. And I want to spend the next couple of minutes, if you guys have any tickers you want to look at, give me a couple tickers if you'd like. And I'm happy to look at them here inside of the next couple of minutes here. So if you have a specific stock you want to look at, let us know. I'll quickly start off with Apple. Just as an FYI, we actually finally had Apple break its long-term, intermediate to long-term trend on the market rover, which is our trend algorithm. You can see Apple actually finally broke its trend to neutral last week. So the stock is no longer in a bullish trend. It's been in a bullish trend for quite some time. It's actually now broken that trend. It's now neutral. What does that mean? Does that mean I have to go out and sell or short all my Apple stocks? No, of course not. It just means that it's neutral. It's choppy. The odds don't really favor a long or a short position it's just kind of in no man's land. So that's what's going on with Apple, and quite frankly, a lot of the other big names like that are kind of in a similar position. So, all right, if there's no tickers, we'll leave it at this, and I'll see you guys here in about in a couple of hours in our session. The link for that is in the chat, and yeah, we'll see you guys there. Thanks for being here, and we'll be back here with Set the Market on Monday. Remember, we don't do this on Fridays, but we're back on Monday. So we'll see you guys in a couple of hours. Take care.